Hey guys, this is Cameron with Emerson House Buyers. Every week I come to you guys, I deconstruct some of the questions I've been asked, either on the, YouTube videos, on Facebook, at local networking events, groups I've been to, just things that have come up in general articles maybe I've read, and I deconstruct those and kind of consolidate, deconstruct, and put them out for you guys in a weekly video. This week, I want to talk to you guys about Subject 2. So, Subject 2 is a really interesting strategy, and a lot of newbies like it because it's a low and no money down strategy. So this is a strategy where you come in, you take over payments, you take over the seller's financing. You can give them a little bit of money, sometimes nothing, sometimes a lot, depending upon how much equity they have and what their motivation is, what you guys agree to. And then you make payments on the seller's behalf. So this is a great way, if you have terrible credit and little money, this is a great way to use that to your advantage and lock in this primary residence financing that the seller obtained, which is usually very minor. It can be, the most lucrative interest rates are for primary residences. So I've seen them, high twos, low threes, mid threes, low fours. And then you can turn that around and owner finance it if you want. So you basically do a wrap around the Subject 2, and maybe somebody's having difficulty finding financing. Either that's because they're self-employed or because they have a bad credit score. Maybe they had a foreclosure in the past and they just need some financing. The bank's lending restrictions got a lot tighter after 2007, 2008 during the crash. So a lot of self-employed people are having an issue, and a lot of international folks are having issues getting financing. So I want to talk about Subject 2s a little bit. Like I said, it's come up a couple times over the past week, and it's just kind of been an abundant conversation that's been going on. So I wrote down a handful of things where a Subject 2, what kind of situation a Subject 2, you can use a Subject 2 in. So I explained kind of what it was. You basically take over the financing that the seller had in place, and you're going to be making payments on their behalf. So that can involve, like I said, a payment, some sort of payment, or nothing. You just take it over and they walk away. So situations where this can occur: high loan to value. When, let's say, the house is $100,000 and they owe 90, well, you can't buy it at 90 by the time you factor in closing costs, etc. It just doesn't make any sense. You wouldn't be able to make any money on it. Now, if you take it over Subject 2 at 90 and they have a 4% interest rate, and then you owner finance it at 110 with a $20,000 down payment, and you make $350 a month on the difference between the 8% interest rate you're going to give somebody else and the 4% interest rate that the early financing was, or the primary residence financing was, that you're making payments on behalf of, then it sounds like a pretty good deal. So high loan to value can be situations where the seller comes in, they cannot sell, either with the realtor, they don't have any equity, maybe they got behind. But the high loan to value is definitely a situation where, if none of your other strategies are working, where you can't go in and pay cash, it doesn't really make sense as a rental. Now, some Subject 2s can, but if it's high and the seller can't get out, this is a perfect opportunity to come in and use the Subject 2 strategy. Quick sale. So again, just like cash, sometimes the cash doesn't make sense or what have you. Subject 2 can also be a strategy where you come in and you can do it quickly. It can take 10 days or less. Attorneys draw up some documents, go to your local title company. They can handle all this stuff for you. You don't need to know all the intricacies behind the financing and how they do the note and how they do the wrap, and how the whole Subject 2 process works. It's simply a checkbox on the standard contract for Texas as a loan assumption. Now, I don't know about other states, and I'm not an attorney or play one on the internet, so go do your own due diligence on your laws, but the Subject 2 is very straightforward. So the other one, you got to make sure that the owner understands that they're not going to be buying a home. another home. Well, let me back up. That this loan is going to stay in their name, and that sometimes they have an issue with it, sometimes they don't. If they're going to rent or they're downsizing, maybe they already have another home. In our instance, the last one I did, the sellers were actually downsizing into a gated community, kind of assisted living situation. So they sold the house. They didn't mind doing a subject to instead of trying to sell it outright. But you want to make sure that they understand, it's clearly communicated, that the financing is going to be in their name. You're going to be making payments on their behalf, and if they run a credit report or try to go apply for a loan, that this balance is going to show up. So just to be clear, you want to make sure you operate with integrity and let those people know that that's going to happen. In the situations where this works the best, they usually don't care. The most recent one we're doing, it actually involves a lady who fell behind on her payments. So we have to bring those current. It's a higher loan to value, but it makes a lot of sense turning around and owner financing it. So like I said, you get a nice down payment up front from an owner finance, plus the monthly payments, the difference between the 4% interest rate that you locked in and the 8-9% interest rate that you're going to offer the other buyer. Basically, guys, that's it. High loan to value. These are very lucrative. They don't always have to be. They can be a lot of equity in the deal. But the owner has to understand, because we operate with integrity. I hope everybody else does out there. There are some people that don't, but make sure that they understand that the loan is in their name. You don't know when you're going to pay it off, unless you do have some sort of idea. But if you're going to owner finance it, you have no idea. And then, like I said, the other situation would be for a quick sale. Are there situations where you can't do it? I'm absolutely positive there are. It gets a little tricky with double wraps, etc. Some of the ARMs, the adjustable rate mortgages, you want to be careful on. The ones I have done have typically been from a fixed rate mortgage, 30-year amortization on that. But guys, the subject twos, if you're new, are a great strategy. Don't be intimidated by them. Really don't be intimidated. It's a great way to lock up some financing, and you can use a lot of subject twos as rentals as well. Done that before as well. So it's not one of those where you just need to take it over subject to and owner finance it if that's not something you want to do. And you can always refi and unlock in your own financing. Say, you get your feet wet and you have a couple rentals now, you can always pay that off. It doesn't have to be one of those where you're locked into it for the whole rest of the 20, 30-year term that you have on the loan. So don't be afraid of it. The other bit I'll say is use the title company. The title companies will help you out a lot. They have the attorneys, they have everybody already set up, so leverage them, leverage their knowledge, go into them with the contract and just say, hey, just tell them, this is my first owner finance. I'm not, I haven't done this before. Do you have some recommendation of attorneys? Did I fill the contract out properly? I did something very similar to that when I first started. I was talking to the attorney and said, hey, help me out here. I'm not clear. And they walk you through, and then you get your feet wet and you know what's going on. So you let them do what they're good at. Guys, I think that's really a high loan to value. Look for these low interest rates on the financing. Is always a good indication. People who want to sell quickly and people that don't need to go buy another home, or are not worried about that financing staying in their name. Those are good opportunities to get a subject to. So hope this helped. If it did, guys, share it. If you have any other questions, please ask questions below the video. I'll be more than happy to answer and follow up with anything or dive a little bit deeper on any other questions you guys have. So hope this helped again, and thanks, guys. Appreciate it.